name is Stephen, and today we shall be considering what we refer to as gap in relation to trading. So, how do we trade gaps? What are the importance of gap to our trading? As a trader, you must have in mind, you must know the area that we have gaps while trading. Gaps is an important aspect of forex trading, and in as much we have better understanding of this system, you will appreciate that this will enhance your trading system. So without further ado, let's go straight into the chart and see the way gaps work. Now, here is 15-minute chart of Brents. So if you look at this place, you will agree with me that the market are divided into sections. Now, this place that we have this box that is here is signifying gaps, while we have the beginning of the London Open. At the beginning of the London Open, we often experience gap, and at the beginning of each section that we must experience gaps. So as a trader, we should understand what particular situation that we are facing while trading. Now, it is expedient that we must understand that why the London Open for 1 hour, that we must understand that the system that we are going to be facing at a particular moment at that 1 hour is gap. Now, if you look at this place now, from here to here is referred to as gap. This very pulse is referred to as gap. And this gap has enabled us to do what? To be very careful while trading. Now, let's go back to Euro. Let's go back to cable and see how cable reacts with gap. Now, when the market opened today in Wellington section, this is Wellington section, when this market resumed from New Zealand, this is where the market resumed. Then it moved to Tokyo section, and once we get to the Tokyo section, immediately we resume back to what we call the London section. And while in the section, the first 1 hour of London section, we refer to this as gap. Now, while you are trading, it is always important that when the market resumes for the day, you must take note of the gap. That is, you must wait for an hour or two for you to be able to get a proper direction while trading. Now, if you look at this place now, this box here, that is here, this box is signifying gaps. Now, as a trader, what you need to do is to wait. You must wait while trading, while the market resumes. You must not jump into the market. You must not jump into the market immediately, because you must realize that at the beginning of the trade, we have what we refer as gap, and that is why it is advisable that as a trader we must wait for an hour before entering the trade. But to me, I always give 2 hours. That is, I always give about 15 minutes, about 8 candles of 15 minutes before getting a trade. Now, if you look at this place now, this very place, now let me expand the trade. I want to magnify the trade for you to be able to see what I mean by gap. If you look at this place, this box that we are having here is what we refer to as London Open. Immediately the London Open, what do we have from here? We have the gap. The gaps move from Asia and from Wellington section, from European section down to the London Open. And immediately the London Open, like I have told you, it is not advisable for us to execute trade at that particular time. We must begin to wait for what we refer to as gap. Now, if you look at this place now, you will realize that this boss is gap, and we must calculate the difference between the open and the close of the gap period, which is in this case, which is 21 pips. And after that, there are no visible direction. Then we have to keep waiting until we see a break of the gap, because after the gap finish, we must either see a break up or a breakdown. Now, that is why we must wait. If there are no break of the gap, we must wait for another 1 hour for us to be able to identify a potential break. Now, if you look at this place now, this very candle that is here, that is where we get a break. Now, I'm drawing a line from here for you to be able to see this. This is where we have a break. And after we have this break, look at what happened. We begin to move down to what? To Asia line. This line that you see here is the Tokyo high. Are you getting the point now? This is the Tokyo high. This is what the market moved for the whole day. And because we don't want to be caught in a gap, that is why we have been able to wait and see that, okay, what is the direction that we have after the gap. Then after the gap, we have the market projecting ahead to what? To the Tokyo section. And this is the high of the Tokyo section. And after that, it couldn't break the high. They start moving and until they have a way of breaking the high when the New York section resume. So, but the essence of this video is to identify the gap and is to pinpoint how we trade the gap during the London Open. Like I have explained in my previous video, that while we are trading the London Open, especially for the pounds, we must give an hour or 2 hours before we get an entry. Now, basically, I recommend 2 hours. And while we are giving these 2 hours, we must do what? We must appreciate, or we must look for an area of potential break of the gap area. Now, after the 1 hour, look at what happened from here. The gap was broken through this candle. And while it broke, it moved up to what? To Asia, which is to the Tokyo section. Look at what happened from the Tokyo section. It couldn't break the Tokyo section. It continued to move on. It moved on until they find a way of breaking the Tokyo section, and we have a break of the 240 moving average. Now, how do we have this break of the 240 moving average? Is because we have two sections overlapping together, which is what? Which is the London Open and the American Open. Now, from here, look at it from here. From here, we have the American Open, which is, we have the American gaps from here. Then after the gap, what do we look for? We continue to look for an entry, continue to look for a candle that will break the gap. And this is the candle that break the gap. Immediately the gaps was breaking. Look at what happened. The trend, probably the prices continue to move forward. The prices break high of yesterday, and look at what happened from here. So it broke the 240 moving average. While the 240 moving average was broken, look at the direction. The price keep moving until they form a new high. So basically, while we are trading, we must appreciate the gaps. As a trader, you must identify where we have the gaps. We don't trade, especially during the London Open. That is why we must give a free period of 2 hours or probably an hour before taking the trade. So from here now, look at what happened from here until these gaps, the high of this gap was broken. That is when we have a very good one, a very good entry. Now let's see another example, maybe another day, probably another. Now let's see what happened from here. Look at what happened from here. This is London gap. Like I have told you that when the market resumes during the London gap, we need what? We need to be very careful, because at the gaps, that is where the UK banks come up to manipulate the market, especially they manipulate the cable. Look at what happened from here. Immediately we have what? We have the market resume. Look at what happened. The market shoot up, and after that, it continued to find a way down again. Continue to look for another way to go down again. Now, if you are trading, basically you are trading a downtrend, and you put your stop around this place. This is what they will do. They will hunt your stop and do what? And continue the direction again. So that is why the essence of gaps is for us not to be caught in a manipulating area. It's for us not to be caught in a manipulating area. And that's why you see this place that when the trend continue to move up, what we have here, from here, look at what happened. They move down again and move down again until they find a way. And once the New York open again, once they open, we have an overlapping section. That is, we have the London open and the New York open. We have the London open and the New York open, which literally means that we have two sections overlapping together. And this is where we see much of the volatility. Look at what happened from here. Immediately we are having two sections from here. Look at the move the market continue to do. The market continue to move very seriously to the downtrend, and we will not have seen this move if there are no overlapping section. This move will not have come up if there are no overlapping section. Now let's begin to look for an overlapping section and see what happened during the overlapping section. If you look at this place from here, look at this from here. This section overlap. Look at the move from here. Look at how it goes. Let's see an overlapping section again and see the reaction of the price. Look at the overlapping section from here. When London and US and New York overlap, are we seeing the direction? Look at what's happened after the gap. Look at what happened after the break of this gap. Look at the move, it goes up. So when we are having two or more sections overlapping together, that is when we experience the gap. Now let's move down again and see another example how we can appreciate the gap. Now let's look from here again. Look at this very boss from here. This very boss here is what we refer to as London open. Then after the London gap, we have a break of the London gap. Look at what happened when we are still having London and Tokyo section not overlapping together. We see that the reaction is not as pronounced when we have the New York open. Look at what, once we have the New York open from here, look at the move. The move very seriously, and look at how it goes. Now that is why while we are trading, we must always appreciate the gap, and we must always look forward where we have the overlapping section. That when we have the market moving, combining together, we're having different sections combining together. That is where we begin to appreciate what we refer to as what? As high volatility in the market. So let's move to another example. Let's look at the gold. Let's see the reaction of the gold. Let's see what happened previously with the gold. Let's see how the gaps and the overlapping section has been helping the gold to move. Look at what's happened from here. This is London gap. After the London gap has been broken, look at what we have. Then this is London section. Then after the London section, we have what we refer to overlapping section. This is where we have the overlapping section. And look at what happened from this move. When the Asia section, the American section, and also the London section overlap together, look at what we have for gold. Look at the reaction. The reaction was so massive. It was so massive. Look at how it goes. Look at the move. The move was so heavy. So while you are trading, you must consider the time of day. What time of days are you in? What particular situation are you? Is the market first resuming? Is the market still not in shape? Are you trading within the gap? Are you caught within the gap? Those are the things that you must look at. So for you to have further information about this video, you have to subscribe to this channel so that when I release another video, you will be the first person that will be notified. Subscribe, like this video, and click the notification button that when I release another video, you will be the first person that will be notified. And if you need this software, contact me. I will send it to you, and so that you can use it in your trading system. You can add it to your system and continue to look at how the section actually affects Forex market. So I wish you good luck while you are trading, and I say good luck to you and God bless you.